what were some of those, just top one or two that come to mind, lessons that you were able to take away from that experience, the tech bubble experience, that you were then able to apply later on in your life?
Well, I mean, the first lesson is really, uh, the lesson of venture capital, which is, you know, you need to be very careful of when you take it and who you partner up with. And, with V-Trips, we have not taken in any venture capital. And, and there may be a point where we do that, but we'll be very careful to vet our partners very carefully to make sure we have common interest. There are, some really excellent venture firms, and then there's some really terrible firms. And then also really understanding what is the time, what's the timeline of when a venture firm expects a return, and are they going to push you into, essentially doing things that are reckless to try to get there. Um, you know, it really is a double-edged sword. And in our business of vacation rentals, there's a ton of people that are taking money from ventures. Um, but it can be a bit like taking the poison apple. It may look good, but you may bite into it and it ends up killing you. So you've got to be very prudent. And I think there's also the discipline, which I think anyone I would talk to is this: build a profitable business. If you build a profitable business, you don't have to take venture funds. I mean, if you're truly profitable, you can pick and choose your spot. So, that's really kind of in a nutshell. I mean, I know I've talked to venture people, and I think they drink a lot of their own Kool-Aid. They believe in this kind of model, and that's great for them. It's kind of self-serving, but it's not really great for the entrepreneur to buy into, this is the way things are done. It's, build a profitable business. There is nothing wrong with building a profitable business. And guess what? If you build a profitable business and you decide at some point, based on the terms and conditions, to take money and drive revenue short term at the expense of profit, at least you have the underpinnings of understanding how to create profitability if you ever need to turn it back. So, our company, we have substantial revenue and we have substantial profit. We certainly could drive more revenue at a greater pace and take less profit. And I know how to do that. But understanding that discipline is critical. And too many companies have made the mistake of thinking it's all about revenue and they don't manage their costs. And in many cases, some of these people lose control of their company because the venture capital kick them out. They have shares of stock that basically are the lowest of priority. And if there's a sale, they're last in line. So it's kind of a sad situation. I've seen a number of companies in the travel space who have dissolved, and the founders who just basically worked 80 hours a week have nothing to show for it. So it can be a terrible situation to get into venture funding unless you really, really understand what you're doing, and you really pick the right partner, and you both are aligned with what is the path ultimately for liquidation of the partner. So how long do they want to stay in? What are the terms of them getting out? And you're all on the same page.